Good evening, everyone. How are you? I hope audio is okay, video is okay. Should I start, guys? Good evening, everyone. Good evening, Ashraf. Great. What should be the answer, people? D. Corporation total basis in the asset. Which step is this? Which step is this? Step number 4. Correct. It is going to be step number 4. Now, your cash basis, incorporated practice, no liabilities falling, you have done it. Okay. Um, hmm. Now you are giving 30,000 for which fair market value is 34,000. And this is the cost. How much realized gain? What is the value of step number 1? Correct. Value is 4,000. Correct. What is the value of step number 2? 0. Correct. It is 0. What all you got the answer? You are saying C for this, A for this, Ashwar, right? No, C for this. C, okay. And Reena, you are saying D for this. Okay. So step number, what is step number 4 for me? Net book value. Correct. Net book value plus the recognized gain, nothing else. So yeah, correct. Point clear? Ruchi clear? Okay. And 2 more questions. What is the answer for the first one, guys? Zero. P. Uh, you have organized a corporation which issued the voting stocks. Fair market value is this. You have transferred so and so. Building subject to. Now, what is land? Lind. What is Lind recognized? Lind is giving the building. Fair market value is this. Correct. But you are the part of the control group, and that's why 0. Correct. How about this? What is ACE's basis in the building? Step number, which step is this? Step number 3. No, step number 4. The company's basis in the building. So what is going to be this step? Correct, because there is no recognized gain. Then net book value would be the basis. Right? Perfect. Guys, I hope it is okay. Okay. Now, before I start, guys, any question? Whatever you have done it yesterday. Anything not clear? Anything you want me to repeat? All good, guys? Allow me a minute. Starting on screen. How many steps we have done, guys, yesterday? We have done 4 steps. Let's quickly revise what we have done. Step number 1 is the realized gain. Step number 2, recognized gain. Step number 3, stock basis for the shareholder. And 4th is properties basis for the company. Now we'll try a couple of questions, guys, before I move to the next question. I'll do the question from the book only so that you will see, are you able to do this or not? A contributes property worth 100,000 for stock operation. This is this. B perform the services. Receive this. Both the transfer occur at the same. What are the tax consequences for A and B? So you have to tell me what is the recognized gain for A and B. Try. Everyone, what's the answer? Ashraf, Ruchi, Charlie. A has contributed the property. Worth is 100,000. 100,000. 100 stock. Net book value for the same is 75,000. So B has, what B has done? B has provided the services for 100,000. That's it. How much B will recognize? B is very simple. Because B has provided the services, everyone, that person should recognize the gain. Point here. So how much? 100,000 is going to be ordinary income. Point here. Now, what are the tax consequences for A? A is providing AP or DP, guys. A is providing the appreciated property. But both of them are the part of control group, guys. So is A going to recognize any gain? Sorry, my bad. They are not the control group. 100 you are getting, 100 A is getting, and how much B is getting? B is also getting 100. So how much A is getting, guys? Good point. 50% A, 50% B. So are they the control group? No. So that's why you will recognize the gain of 25,000. So 25,000 is the gain for A and ordinary income is 100,000. Is that correct, everyone? Shalini correct? Guys correct? Everyone, is that okay? Quickly read this. Read this. Guys done? I hope it is okay. Clear, Ina? Okay. Now let's do this question together, guys. Okay, don't see the answer. Let's do it together. ABC company admits Tim. Tim, you have admitted as the one third of the shareholder. Tim is contributing a building. Tim is giving a building, guys, for which fair market value is 500,000. Basis net book value is 100,000. You are also giving a loan, guys. How much loan you are giving? Loan you are giving 225,000. Guys, is that okay? So don't look at the answer. Let's do it together. Guys, how much is the realized gain for the team? Correct. 400,000. This minus this. Step number one is 400,000. Correct. I hope it is okay. Step number two. How much is the recognized gain? 125,000. How? 400,000, which is realized gain. Do we have the boot received, guys, here? Do we have the boot received here? No, but I have the excess liability. How much is the excess liability I'm having? Dina, how much is the excess liability? Very good, Charlie. 125,000. I'll take the lower value. How much is the lower value? Lower value is 125,000. Very good. So, step number one, step number two. Is this okay, guys? Step number three. Step number three is net book value, which is 100,000 plus recognized gain 125,000 minus boot received 0 minus total liability, which is how much? 225. Is that okay? So how much is step number three for me? How much step three for me? Zero. Absolutely zero. Is this okay, guys? Step number four. Tell me what is step number four. Step number four is whatever the loan you are taking, or net book value. What is the net book value? 100,000 plus 125,000. So it is 225 plus whatever the loan you are taking in that case. Loan is also 225, whichever is higher. So it is 225. Same thing, guys. 225 is the basis of the corporation. 0 is the basis of the shareholder. Gain taxable, that means step number two, 125. Step number three, step number four. If you have done the steps, guys, there is no question you can't do that. It's very tricky in the question, in the book. You don't need to follow any format from the book, guys. Any format. As far as you are getting the answers, we are okay with it. Is this okay, guys? What I'm saying? Okay. Quickly try one more question. Let's do it on your own. Otherwise, you will not get a. You just become complicated to do. Is it visible, guys? Tell me step number one, two, three, four. Try, guys. You know everything now. Give me in one go, Rina, with the commas, like give me answer all in one go. 120, 0, 140, 140. Uchi, what's the answer? Rina. 'Correct. Looks correct to me also. Step number one. Step number one is this minus this. 260 minus 140. So this is 120. Correct. Step number two, which is 120 or no boot received, no excess liability. So zero. Lower is zero. Absolutely correct. Step number three, net book value, which is 140 plus recognized gain 0 minus boot received 0 minus liability 0. So 140. Correct. Lastly, net book value plus there is no loan. So automatically answer is 140. Correct. See, same question we have done. Step amount realized. Step one. Step two. Step three. Step four. Is it clear, guys? I hope it is okay. We'll do last question, which is there in the book, and then I'll move. See, I'm just doing all the questions with you so that whenever you are reading on your own, you will not get confused, guys. We'll do one last question. Same in this. Tell me one, two, three, four. All the four steps. 120, 0, 80, 140. Right? See, we got the same answer. Same 120, no gain recognized. Step 2, your stock basis. 3, step 4. Is this okay, guys? Sir, I hope it is okay. Now, okay. This is the question. Okay, here, see this question carefully. This is the question. In this question, whatever the mark, whatever the block which I made it right now, okay, are they talking about that in this block which I have made it here? So what we have done it directly, we have done it 260 minus 140. Directly we have done it. They are just doing the multiple versions of that. Directly we got the 120 of that. So it does not matter whether you follow this approach or that approach. Answer is the same thing. 120, 0, 80, and 140. Should I move, guys, if it is okay? Now, I told you that I will do this last question, but still I'll do one more question, guys, with you. Allow me a moment. I want you to do this question also. This is an important question. I'll tell you why. Um, can you see the question? Can you see the question, guys? Is it visible? Yeah. Do that question. Please tell me step number 1, 2, 3, 4 for this. Done. What is the answer? Not clear? Zero zero 520. Any other answer? Ashok, what's the answer? Reena, Ruchi. Not clear? Let's do step number one. What is step number one, guys? Zero. Why zero? Because adjusted basis is 20,000 and 16,000 is the market value. That's why. Yes, no. Yes, no, guys. Is that why you're saying it? Mhm. You're doing the same mistake. That's why I want to do this with you. Guys, I gave you that example. If let's say I am having, let's say, an old Oppo phone, which is for 30,000 rupees. You guys are having a brand new iPhone, which is 1 lakh. If we are exchanging, guys, how much more money should I give you? How much more money should I give you? How much more money? Correct. I'll give you my Oppo phone, and along with that, I'll give you a cash of 30,000. Point clear or not? Yes, no, maybe. Clear? I told you that whenever you are having it, for example, I gave you the example, same example I gave you here, that when the shareholder is given, how do you calculate that fair market value is 100, net book value is, let's say, 80. So you say that my gain is 20, right? Now, what you are going to receive here, you will receive the stock here. Let's say stock you are receiving fair market value 60. How much more you need? Let's say they are also giving you a property for which fair market value is $10. How much more cash you need, guys? Just 10? No, no. 30. You will say the fair market value, no? Why? How does the net book value matters? You will see the fair market value. I should get the worth of my money. So you will get the 30. Now the transaction is equal. Now the transaction is equal. Yes, no. Rina, is that equal now? Yes. You are giving something for 100. They are also giving something for 100. Guys, point clear what I'm saying? Yes, no, maybe. Should I repeat if it is not clear? Rina, clear? Charlie, Ruchi? So how would you calculate if I don't give you this? Can you tell me what is the gain or loss? Yes, absolutely. You will add the three items 60 plus 10 plus 30 minus this. So you will still calculate the gain. Are we good up till here or not? If this is not given in the question, can you calculate my gain or loss? Absolutely, yes. Up till here, story clear. Should I move? Now, if I tell you guys, I am giving something for which fair market value is, let's say, 100. I am giving something for which net book value is 60. Okay. So obviously my gain is 40. Company is giving me stocks for fair market value is 50. Company is giving me any property for which fair market value is um, 30. Is this the transaction equal? Or let's say, I'm telling you, I am giving my liability to the company also. How much I'm giving my liability to the company? 20. Is this the transaction equal? No, it is not equal. No, it's 100 and it's 50. It's 80, isn't it? No, don't look that way. Ignore this. For 2 minutes, ignore that, Shalini. Okay, guys, ignore this for 2 minutes. In this case, I'm just look at this scenario only this scenario. Okay, how much money company should give to the shareholder? Let's say, if I'm just saying you are transferring an asset for which fair market value is this, and you're giving your liability also, how much money company will give to the shareholders, guys? Charlie, how much money would you give to the shareholder? Point clear or not? Ashraf, point clear. Ruchi, point clear. 80. Are they not giving 80? Yes, they are giving 80 only. Is that transaction equal? Is the transaction equal, guys? Yes, transaction is equal. I hope the point is clear, guys. Yes, no, maybe. Now, here, how much is my realized gain? Same, 100 minus 60. 100 minus 60 is my realized gain. But if I don't give you this, then you will do this. 50 plus 30 plus 20. Is that point clear? Minus 60. Same 40. Whatever the loan they are taking over, that's also a benefit for me, no? So I'll take that also, guys. Is this point clear or not, guys? Any doubt? Ashraf, Reena, Ruchi? Not clear, Ruchi? See this question one more time. In this case, exactly this is happening. See that. In this case, what is happening? You are giving any property for which net book value is 20,000. What is the fair market value of that? Have they given directly here? No, they have not given anything. Now, but you are receiving the stocks. You are receiving the stocks. What is the value of the stocks? The value of the stocks is $16,000. This is done. You are also assuming company is taking over my liability, which is 5,000. Good for me. So we are reducing that. You are also receiving the cash also. I'm receiving cash also. How much? 10,000. Now tell me how much is my gain? Realized gain. Is this okay or not, everyone? So step number one for me is 16,000 plus 10,000 plus 5,000. This is what I have realized, everyone. Amount realized for me minus 20,000. So 11,000 is going to be my gain. Reena, clear? Step number two. Tell me what is the value of step number two, guys. Step number one, which is 11,000. Or do I have the boot received? Yes, 10,000. Do I have the excess liability? No, 0. Whichever is lower, lower is 10. Good. So 11,000, 10,000. I hope it is okay. See the answer. See the answer. Realized gain 11,000. Recognized gain 10,000. I hope it is okay. Take a screenshot of this example, guys. That's not in your book. So take a screenshot. As you're on. Okay. Whenever you are taking the screenshot, please paste it in the empty PowerPoint because then your alignment will not go haywire because of that. Should I move, guys? We have done all the questions from your book. If you see, the same format is this also. This is gain or loss realized, step number 1. Same fair market value of the stock, liability assumed by the corporation, fair market value. This is giving me amount realized minus basis in that. That's the same thing. Ditto beata. Same form. Is this okay, guys? Rena clear? No, not clear, guys. Let me know. I'll repeat this otherwise. Should I repeat this? Uh, Shareholder, everyone, is receiving the share company. You have given anything. Let's say you have given any property and company is giving you stocks. Along with that stock, company is also giving you a property. What do we call this property, guys? We are also receiving the asset, property. What do we call that asset? We got it boot receipt. Boot. Question is, when you as a shareholder receiving this, everyone, what is going to be your basis in the boot? What is going to be the basis of the property, what you're receiving here? Basis is going to be payment. Is this okay? Is it not the same thing we have done in the step number 4? Is it not the same thing we have done in the step number 4? Yes, no. Properties basis, have we not done the same thing in the step number 4? Yes, no, no. What was step number 4? Step number 4 was company is giving the property. No, no, no. Company is giving the property, sorry, shareholder is giving the property to the company and company is giving the stocks. Step number 4 is that whatever the property company is receiving, what is the basis for the company? Is this point clear or not? This is step number 4. Good point. Now I'm discussing different thing. I'm saying company is giving you a boot, company is giving you a property. Now, as a shareholder, when you are receiving this property, for you, what is the basis, guys? Both are different things. This is fair market value. Guys, the difference is clear. Just because there also it is the properties basis, here also properties basis, don't get confused with that. Those are not same. Those are different things. Clear? Ashraf, clear? Shalini? I hope it is okay. Rina, clear? Now, if the shareholder, is giving, let's say, any appreciated property, and let's say 351 is not satisfied, is the shareholder going to recognize the gain, guys? Yes, shareholder is going to recognize the gain. Which kind of a gain is that? Is that capital gains or ordinary gains? Capital gains. Mostly it is going to be capital gains. Mostly it is going to be capital gains, but it is also possible. So depends on everyone which kind of a asset are you giving. If you are giving capital asset, you will have capital gains. If you are giving ordinary asset, you will have ordinary gains, everyone. For example, everyone, if I tell you that shareholder is running a business, you are running a business of making shoes, and now let's say you are transferring the shoes to the company. Shoes is the inventory for the shareholder. Point clear, guys? Shoes is the inventory for the shareholders. So is this the capital asset for the shareholder, guys? No, it's the ordinary asset. So whenever you are going to transfer the ordinary asset, everyone, you will have the ordinary gains. Point clear, people? But if let's say the shareholder is having some stocks, and if you are transferring those stocks, on that you'll have a capital gains. Clear? I'm just writing a clarificatory note here. Character of gains. Obviously gains because losses are not possible. So character of gains depends on the type of property contributed. Done, guys? Copy. How does it matter? How does it matter? It is ordinary gains, capital gain. How does it matter? Whether I'm having the ordinary gains and capital. Does it matter? Good point, Ashok. It matters. If you are having the ordinary gains, we are going to tax at normal rate, which is 10 to 37%. But if you are having a capital gains, we are going to tax at the preferential rate, which is 0 to 20%. That's why it matters. That's why it is going to matter. I hope it is okay, guys. Now, shareholder is giving the property, guys, to the company, and company is going to use this asset going forward. What is going to be the basis of that? This is something I'm going to calculate in the step number 4. Now, on the property which the company has received, would the company will charge the depreciation on that or not? Yes, obviously. Now you have received the asset, and when you start using that asset in your business, you will start charging the depreciation. No problem in that case. Obviously, you'll charge the depreciation in that case. It is very much possible, everyone, that shareholder has provided the property to the company, let's say on 31st of March 2024. So obviously, maybe it is possible that before that, shareholder will charge the depreciation. After that, who will charge the depreciation, guys? After that, company will charge the depreciation. Point clear what I'm saying, guys? I'm just writing a clarificatory note here. Basis calculated in step 4 shall be used for depreciation calculation by company. Depreciation is allocated. Depreciation is allocated between shareholder and company based on number of months company own the assets. Should we move? No. No. Dina, you want to copy? Let me know once you're done copying. Right. Step number 4, guys. Step number 4 was properties basis, whatever the property shareholder is giving to the company, properties basis for the company. That's step number 4 for me. How do you calculate? You calculate net book value plus the recognized gain or liability, whichever is lower. Remember, whichever is going to be lower. No, not lower. It was lower, no? No? Good. Whichever is higher. Where I have done somewhere lower, I think. In which step? In some step we have done lower. Correct. In step number 2, we have done it lower. Good point. Remember it. So here we have done whichever is higher. Now I'll do the exception of that. That means we will not follow this everyone. Okay, we'll not follow that. See that. For example, if shareholder is transferring any property, okay, for which fair market value is $20, net book value is $100. How much gain shareholder will recognize? No, nothing. Okay. Is it not 80? Okay, 0. How much loss shareholder is going to recognize? Nothing. You don't recognize the loss. We don't recognize the loss. Guys, are we good? Is that okay? But if I apply the step number 4, what should be the basis of the company? I'll say net book value, $100. There is no recognized gain, 0. So basis should be how much? Basis should be $100. Point clear or not, guys? Everyone? Yes, no? Rina clear? Ruchi? But there is one problem here, guys. We have not allowed the shareholder the losses, but shareholder has smartly passed on the property to the company, and you have increased the basis for the company. Now company is having a good situation. On this higher basis, everyone, company will charge the higher depreciation. When the company will charge the higher depreciation, automatically company's profit will go down. Automatically taxes will go down. Can you see the problem? Also, whenever company is going to sell in the future, when my basis is higher, guys, my capital gains is going to be lower. Problem clear, guys? That's why whenever this is the scenario, we will not take that. We will take it fair market value. Is the rationale clear what I'm saying, guys? Yes, no. Otherwise, people will start manipulating it. This is typically be known as built-in loss. Built-in loss. This is something I'll discuss it much more detail in partnership. But already, if you see, property worth is only 20. You are booking in your balance sheet at $100. How does it matter to us? What is the worth of that? 20 only. So ideally, you should book at 20 only, not 100. Otherwise, what you're doing, whatever is the built-in loss you have transferred to the company, and now company is taking the advantage, higher depreciation, lower taxes. Whenever I'm selling higher basis, that's why lower taxes. That's why it is the reality check. Book it at fair market value. Now, story sorted. You book at 20, which is the real price. Is this point clear, people? Quickly read it from the book. If the aggregate adjusted basis of the property, adjusted basis of the property means, that means net book value. Net book value. If the net book value contributed to the corporation by the transferred shareholder in a tax-free incorporation exceeds aggregate fair market value in that case. So can I not say AP or DP? Which kind of a property are we talking about? DP. DP in that case. DP. The corporation's basis. Step number 1, 2, 3, 4. Step number 4. In the property is limited to the fair market value of the property. This prevents the transfer of the property with the built-in loss to the corporation, which we discussed. I hope it is okay, guys, what I'm saying. Yes, no. Generally, everyone. Generally. Okay, again, it's not a rule. But generally, if I talk about step number 4, which is the properties basis everyone for the company, it is generally equals to fair market value. Again, there can be very much exceptions to that, but I'm talking about generally everyone. For example, everyone. Let me do it here. If shareholder is passing on any asset for which fair market value is, let's say, $100 and net book value is $80, and let's say 351 is not applied, what is my recognized gain? How much gain would you recognize, guys, then? If 351 is not there, I'll recognize $20. Correct. What is the company's basis? Company's basis is going to be, tell me. What is the company's basis, guys? Correct. It is going to be 80 plus 20, 100. No, Shalini. I have to add the recognized gain also, no? So this is net book value plus the recognized gain. That's why it is 100. So see, it's approximately to a fair market value only. Approximately to fair market value. I'm just saying it because sometimes the statement is given that for the company's properties basis is approximately to the fair market value. Then maybe it's a correct statement. Is the point clear what I'm saying? Everyone? Okay. This is something you have already done. Quickly read this. Which step is this? Step. Read this. Confirm. Done. We are done with everything here. Yeah. All right, guys, have you seen the lecture which I asked you to see? Everyone? Ruchi, have you seen that lecture? Okay, I'm glad you guys all are playing. When did you guys seen it? Today or tomorrow somewhere? Today or not tomorrow? Yesterday, have you seen that? Today you have seen it. Okay. First 1.5 hour, that's all. 1.5 minute. No, 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 no. 1.5 hour, Charlie. Yeah. Okay. Ashraf, I hope you have seen it also. Uh, it's good, guys. If you have seen that lecture, it's good because then I can go a little faster. Otherwise, I'll do that same 1.5 hour concept again with you. Now, I'll don't worry. I'll recap that concept again with you. Uh, Now you will learn faster. That's why I want to do that. Okay, no problem. Anything is not clear in that? Sorry, anything is not clear in that? Everything was okay? Everything was okay? Okay. Income tax, everyone. If I talk about income tax, basics, I'm covering it here, everyone. Income tax in India, guys. Income tax in India is which act we do in India? Which income tax act we are having? We are having Income Tax Act 1961, unless either one changes to something different. Which department is that? Which governs that? We are having CBDT, Central Board for Direct Taxes. Central Board for Direct Taxes comes under which ministry, guys? It comes Ministry of Finance. Ministry of Finance. Now, if I talk about US, everyone, we are discussing federal income tax. We are discussing federal income tax. Here, which act we are having? We are having IRC, Internal Revenue Code, IRC. This is something which is under which department? It is IRS. I've already discussed it with you yesterday. Internal Revenue Services, everyone. This comes under which department, everyone? This comes under the department of DOT, Department of Treasury. Okay, Ashok, clear? Um, Corporate distribution, guys, I have covered the basics of the corporate distributions. Now I'll go a little detailed in this because in the rec, we don't have so much of a detailing, but now it's a little tricky in TCP. I hope you have seen the basis also there. I've discussed the basic concept also there, basis. The basis means something which is cost, everyone, right? I've done that also, everyone. Can basis be negative, guys? Basis can never be negative. Can basis be zero? Yes, basis can be zero. Sorry, guys. Which was the lecture number? Can you tell me? Do you remember which is the lecture number I asked you to? Lecture number 16. So people who are seeing this recording, please see reg lecture number 16 and 4th of August, I think. 4th of August, 2024. So people who are seeing this lecture, please before seeing this lecture, stop this video right now and see lecture number 16, 4th of August. First 1.5 hour, see that where I've discussed the corporate distribution, and now see the rest of the video of the TCP. So as I discussed, everyone, basis can never be negative. Basis can be zero also. I've discussed one more point, everyone. Once you recover the basis, what do you have after that? After you recover the basis, you will have capital gains. You will have the gains, you will have the capital gains. Is that clear, everyone? I hope it was okay. Now, whatever the company is distributing, right? Whatever the company is distributing, does that automatically becomes the dividend for the shareholder, guys? Whatever the company is distributing to the shareholders, does that automatically? No. We put that into the four buckets. We put them into the four buckets, everyone. Do you remember what are the four buckets? First bucket was current year earnings and profit. Second was accumulated earnings and profits. Good, Ashok. Third was reduction of the basis. And lastly, it was capital gains. Capital gains and profits. Is that okay, people? So as I discussed in that also, everyone, current year's earnings and profit, it's very similar to your profit after taxes. Accumulated earnings and profits, it's very similar to your retained earnings. Out of that, let's say I'm doing the distribution of 1,000 and this is coming, let's say 100, 150, 250, 700, 250, 700, 50. How much is my dividend, everyone? What is my dividend here? Correct. Dividend is only these two guys, this and this, 250. Is this 700 going to be taxable, guys? No, it is not going to be taxable. It is something which is not going to be taxable. Shalini, clear? Guys, I hope it is clear. I'm going a little faster because all of it, you have already seen it, guys. It is not taxable. Would capital gains be taxable for me? Would capital gains be taxable, guys? Capital gains would be taxable for you. Absolutely correct. Um, hmm. Let's quickly try one question, whether you're getting this or not. Company is making the distribution to the shareholder. Company is making the distribution of, let's say, $1,000. Current year's earnings and profit is $100. Accumulated earnings and profit is $500. Shareholder is having the basis of $50. What is capital gains for me? Try. Correct. I'll have 1, 2, 3, 4 here. So 1 is going to be 100, 2 is going to be 500, 3 is going to be 50, and 4 is going to be 350 balancing figure. Correct. Capital gains. Guys, is this okay? Everyone? We have done it. Is this possible that in all the 4 steps, I'm having capital loss? In these 4 steps, is this possible that you are having the capital loss? No. We discussed this point. because I am not selling any stocks. I'm not selling any stocks, everyone. That's why I can't have the capital loss in these stocks, in these four steps. But whenever I'm selling the stock, then I can have the capital loss. Is that okay, guys? People? Uh, I think losses were not there. I have to check what it's. Let's see. Company is having current year earnings and profit zero. They are having accumulated earnings and profit zero. Are they making distribution of 1,000? Is that possible? Zero, zero, still you are making profits. If still you are making the distribution, possible. None of our concern. You can still make the distribution. You can still make the distribution. Point clear what I'm saying, guys? Everyone? Yes, no? Remove. This is all you have done it. This is all you have done it already, guys. To read this, I don't think there's any problem. Read this. I am on page number 16, second module only. As you're done, read just the mark portion. Done. Should I move, guys? Done reading. Okay. So yeah, I'm just looking at this. Have we done the losses scenario, guys? By any chance, if you remember that in case the company is having the losses, how we are distributing that? I think this is what we have not done. That is not in your portion. No, very less. Now comes the new portion. Like this. So we have done this, guys. That current year's earnings and profit is zero, accumulated is zero. We can still make the distribution. Now the question which we are going to discuss here, everyone, how about if it is coming negative? Question, can we still make the distribution? Answer is yes. Now this is all new, guys. This is now going forward. We'll start something new, guys. So I can still make the distribution going forward. Let's see how to do that, first of all. First, let's see one question of the zero basis, everyone. Okay, zero thing. Let's say everyone, current year's earnings and profit is 5. Accumulated earnings and profit is 0. You are making the distribution, everyone, of 20. This guy is having the basis of 2. What is fourth step value? Right, guys, it's important topic. Shani also answer. One is 5. 2 is 0. 3 is 2. 4 is neutral. Simple. Great. Um, I'm creating the multiple scenarios, guys. I'll discuss the multiple scenarios with you. Before that, let me just quickly do the format. Then I'll copy paste that format. Some perfect. Eliminated earnings and profit. Basis. That's going to be my scenarios. Now, guys, what is going to be the 1, 2, 3, 4, one by one? Let's see that. Distribution, everyone. Distribution amount is 40. Distribution amount is 40, guys. Current year is 10. Accumulated is 10. Basis is 5. Quickly tell me 1, 2, 3, 4. 1, 2, 3, 4. 10, 10, 5, 15. Good. So this is going to be easy. 10, 10, 5, 15. Good. So what scenario we are talking about, everyone? I am talking about a scenario where current year and accumulated earnings and profit, both of them are positive. If both of them are positive, everyone, are we calculating both 1, 2, 3, 4? Yes, I'm calculating both of them, all of them. Simple. Let's do, I'm extending the second scenario. Distribution value is 40. Current year's earnings and profit minus 10, minus 20. Second scenario. Basis is 5. What is 1, 2, 3, 4? What's your answer? Correct. It's 0. I cannot make it negative. I can't make it negative. So 0, 0, 5, 35. Absolutely correct. I hope it is okay. So can I say when both of them are negative, I don't have any dividend? Can I say that? Yes, no. Because 1 and 2 is the dividend. 1 and 2 is the dividend. When there is no 1, there is no 2, I have negative, I have no dividend every month. But does not matter. Does not matter. I'll have the higher capital gains. Eventually, it is the same thing. Eventually, it is the same thing, whether I'm having the dividend or the capital gains. So that's why the second scenario I'm discussing, guys. Second scenario is when both of them is negative. Now I don't have 1 and 2, rather I'll have 3 and 4. Point clear what I'm saying? You don't need to learn that. You don't need to learn that. Absolutely not. You don't need to learn that. I'm just showing you so that you know what we are doing it, guys. That's all. You don't need to learn this at all. Point clear what I'm saying, guys? Should I move? Great. Let's see third scenario. Third scenario. This is 40 distribution. Current earnings and profit, I am having a profit of 10. Accumulated, I am having a losses, guys. Is that possible? Why not? Very much possible. This is third scenario, guys. Basis is 5 again. Tell me 1, 2, 3, 4. Very good. This is 10, 0, 5, 25. Absolutely correct. So, can I write like this? If this is plus, this is minus. Okay. First of all, everyone, plus and minus, are we going to net them off? Are we going to adjust them? Answer is no. That means I will not say plus 10, minus 20, minus 10. No, I'm not adjusting them, guys. Okay. So I'm writing one more column. We are not going to net them off. We are not going to adjust them here. So what is the sequence I'm having here? Simple. This, not this, this, this. Is this okay or not? In this scenario, in the scenario number 3, can I not say that I will have a dividend up to the current year earnings only? Because here I'm having nothing. Can I not say that? No, why not, Rina? Yes, I'll have dividend only up to that level only. No, beyond that I can't have it because this is negative. So yeah, let's read up till here before I confuse you more. Before I move, let's read up till here. Page number 16, everyone. 1, 6. A dividend is defined by the IRC as a distribution of the property by the corporation out of the earnings and profit. When I say earnings and profit, it includes both current year also and accumulated also. Now let's see. General rule is that current year and accumulated are not netted. I'll talk about when it is that. Dividend should come from current year first. That means they are talking about 1. Then come from the accumulated. That means 2. Is that okay? Now see that. We have done 3 scenarios till now. Tell me which scenario is this. First one. Circle 1. Both current and accumulated are positive. There are no issues. Distributions are dividend to the extent of that. Obviously, we know that. Nothing new. Point clear, guys? That's exactly our scenario number 1. Guys, clear? Everyone? Dina clear? Only simple. This. Both current and the accumulatives are negative. Possible? Yes. In that case, will you have a dividend? We have discussed this. Will you have a dividend, guys, then? No. Distributions are not dividend. We discussed this point. That obviously when 1 and 2 is negative, I can't have this. Guys, is this okay? That's second. Third, everyone. Ashraf, clear? Third point, everyone. Current year is positive. Accumulated is negative. Are we going to net them off? No, we are not going to adjust them. We are not going to net them off. Distributions are the dividend to the extent of the current year only. I don't have anything beyond that. I'll just have current year only. I hope it is okay, guys. Which scenario is left? I'm a little confused, guys. Tell me which scenario is left. Third scenario is left. No, no, no. I'm saying we have done 3 scenarios. These 3 scenarios we have done it. Plus, plus, minus, minus, plus, plus, minus, minus, plus, minus. Which scenario I have not done? Everyone? Not clear what I'm saying? I'm saying we have done current year is positive, current year accumulated is positive. Then we have done current year is negative, accumulated is there. Third scenario, which I have not done, absolutely correct. Good. This is negative. This is positive. We have not done this. This is something we have not done it. Let's see what is going to be the impact of it. Let's see scenario number 4. Again, distribution is 40, everyone. I am having current year as negative. Accumulated is positive, everyone. Basis is 5. That's my scenario number 4. I'll have 2 versions of that. Question, should we net them off here? Yes. Here I will net them off. Here I'll adjust. What is my net value coming, guys, now? Net value is coming 10. Point clear, guys? So what is 0? What is 1? Nothing. Finished. What is 2? 2 is going to be 10, everyone. What is 3? 3 will remain the same, 5. What is 4? 4 is going to be 25, Dina. 40 minus this 25. Is this okay or not, guys? Everyone? Yes, no? There can be another version here. I'm calling this version as 4A. Guys, is this okay or not? Anyone doubt? Shalini, clear? Net is allowed. Net is allowed. Net is allowed. Net is not allowed in this scenario, Shalini. Whenever current year is negative, Shalini, and accumulated is positive, that's where the net is allowed. Okay. Should I move this scenario? I'll do one more version of this. Same question. Current year is negative, but accumulated, everyone, is 8. It is 4B. Are we going to net them off? Yes, we are going to net them off. What is my net value coming, guys? Net value is coming -2 now. That's a difference. What is 1 now? 1 is 0. What is 2 now? 0. Very nice. What is 3 and 4? 5 and 35. Is this point clear or not, guys? Yes, no? So that means if I draw that table for you again, if this is negative, this is positive, we are going to first of all adjust them. Now, after adjusting, 2 things are happening. That it is coming positive. If it is coming positive, then I'm taking 2, 3, 4. or I can say net also. But if it is coming negative, everyone, then I'm saying 3 and 4. Is this okay or not? If you see, if it is coming negative, it's very similar to this, isn't it? Obviously, when both of them is negative, it would be the same scenario what we have done. You want to take a screenshot, please do. Copy. Should I move? Question is, why are we doing that? I don't understand. When accumulated is negative, when current year is positive, but accumulated is negative, are you net them off? Are you netting them off? No. But here is negative, here is positive. Are we netting off? We are netting them off. Why such a double standard? See, what we are doing, guys, here, we are making the distribution. When you are making the distribution, you are making the distribution in the current year only, guys, isn't it? You are making the distribution in the current year. So we want to check here that in the current year, are you actually making any profit or not? Do you have anything positive or not? If you are having the positive, let's calculate up to here only. If you are having the positive, that's why we are not adjusting it. But in the current year, if you are having negative and still you are making the distribution, then we want to check your record. We want to check your retained earnings also, that after adjusting, what is your situation coming in that case. Hence, everyone, whenever it is positive, I'll not adjust. But whenever it is negative, we are going to adjust. Is this point okay or not, everyone? Yes, no. See that. Read it from the book now. Current year earnings and profit is negative. Accumulated is positive. The two amounts are netted. And the distribution if the net amount is positive. If the net amount is also negative, then obviously you don't have the distribution. Ashraf, point clear? You don't need to learn any language, any language. If you have made the chart, you are sorted. In fact, I'll discuss the couple of questions with you and you'll be very fine with that. Don't worry about this. Let's do a couple of questions, guys, here. Just keep telling me, would you adjust it or not? Okay. Current year, and here I'm writing AP. Minus 20 plus 30. Would you adjust? Would you net them off? Yes, you'll net them off. Plus 10 minus 20. Would you adjust them off? No. Minus 10 minus 20. Would them adjust off? Would you adjust them? There's no question adjustment in that case. Minus 2 plus 5. Would you adjust them? Yes. You'll adjust. I hope it is okay, people. Let's try a few questions again. Let's try a few questions. You are making the distribution. Distribution is 60. Basis. Basis is 15. I'm here writing current year accumulated values. 10, 10, 10, 10, positive, obviously. Minus 20, minus 40. 10, minus 40. Minus 20, and 10. Please tell me capital gains in all the four scenarios. Try guys. Okay. Let's see that. Hmm. I'm writing 1, 2, 3, 4 here. Positive, positive, everyone. So this is going to be 10, 10, 15. So 20, 30, 20, 15 is 35. 35 in this 25. Correct. Now this 0, 0, 15, and 16. It should be 45. Am I right? Yeah. Now, third, everyone. Third is going to be this is positive, this is negative. Should I adjust them, guys? Should I net them off? No, we'll not do that. This is 10, 0. This is 15. So 25, 25 should be 35. Correct. Should we net them off? Should we net them off? Yes, we'll net them off. But we have to see what is your value coming after that. Right? So this is coming negative again. 10. So 0, 0, 15, and 45. Okay. Guys, are we good? Point clear? Same, quickly do with me. Last point also. Minus 20 and 60. What is capital gains? Should we net them off? Should we net them off, guys? Yes, it is coming positive 40. Positive 40. So this is simple. 0, 40, 15, 5. Clear, Shalini? Distribution amount is 60, Shalini. That's all. Here, Shalini. Let's do one last point before we wrap this topic, guys. Let's do one quick question again. Distribution amount is 10. I am having no basis, zero basis. Is that possible, guys? Is that possible? Yes, why not? Very much possible. Current year accumulated, guys. 10, 10, minus 20, 40, 10, minus 40, uh, minus 20, 10, minus 20, 50. Tell me capital gains on all the four scenarios. Whatever the scenario, five scenarios. All right. Last is different, Shalini. Rest everything is same almost. No problem. Let's see. Um, 1, 2, 3, 4. You guys are saying 0, 0, 0, 1, 0, 0. Okay. Distribution, I am having, there's no question about netting off. Distribution is 10. So 10, 0, 0, 0, 0. Correct. Then this is current year is negative and this. Should I net them off? Should I net them off? Minus 20 and 40. Yes. So net value is coming 20. So again, 0, 10, 0, 0. Correct. Again, should I net them off here? No. So 10, 0, 0, 0. Everything is 0. Are we going to adjust it here? Yes. But it is coming negative. So it does not matter. 0, 0, and this is also 0. Correct? 10. Good. Again, are we adjusting this? Yes. How much is this? 30. So how much is this? 0, and 10, 0. See, correct, correct. Shani, distribution amount is only 10. It does not matter what is this. Distribution amount is only 10. So that's why it is adjusted here. Okay. I hope it is okay, people. All good. You don't need to learn anything here, guys. As far as you have made it, we are good. I've left the first two lines. Now you guys can see and understand easily. General rule is that current and the accumulated are not matter. Agreed? We agreed that. See the exception in the fourth bullet, which is the fourth bullet. That means generally we are not going to adjust. We are going to adjust whenever current year is negative, accumulated is positive. Point clear, guys? Dividend comes from the current year, then the accumulated. We know that. Guys, clear? Same. Distributions from the corporation to the shareholders are taxable to the shareholders if distribution is classified as dividend. This all we have done. Guys, I want you to do this question. It's so simple. See that. It's just a cake of one. That's the question. Your current year is how much, guys? Current year is, tell me, 25. What is my accumulated, guys? Very good. Accumulated is 20. Is this point clear, guys, up to here? Yes, no? No. If I'm saying that distribution amount, whatever distribution amount you're making, let's say basis for the convenience I'm taking is 0. Basis, if let's say I'm taking it convenience wise 0. If I'm saying everyone that my distribution amount is less than 25,000, guys, less than 25,000, then will you have a dividend here? Yes. Shalini, will I have the dividend? Yes, obviously. Because it's, let's say any value, let's say 15,000. So if I take, let's say 15,000, then automatically one is going to be 15,000 and automatically it is the dividend. I hope it is okay. But if I tell you that the amount is more than 25,000, but less than 45,000, would that still be dividend? Reena, would that still be dividend? Yes, obviously. Earlier I was using only current year. Now I'm using the accumulated also. Still it is going to be dividend. First I'll take the current year, then I'll take the accumulated. Point clear, guys? How about if I'm crossing 45,000? Then I'll take the current year, then accumulated, then the basis, and then the capital gains. Simple. Unnecessarily complicated question. In fact, after reading it, delete it. It's a useless question. Read this. Honestly, it is confusing. Read. After reading it, delete it. We have done much better questions. Let me know as you're done. Just the example. That's it, guys. Hold. Is it clear, everyone? No. Company is making the distribution, guys. Company is making the distribution to the shareholder. When you are making the distribution to the shareholder, is it mandatory that you are giving only cash? No. It's very much possible that company is giving any asset also. Company is giving any property also. Very much possible. Okay. Let's say this property which the company has given, net book value of the same is $100. And when you are giving the property, everyone, then the fair market value is 150. For the purpose of my distribution value, guys, what should I take? 100 or 150? For distribution value, what should I take? We should take the fair market value. The way we are doing it till now, I'll take 150 here, guys. Point clear or not? Which is fair market value. I hope it is okay. Let's try one question. Company is giving cash to the shareholder. Let's say you are giving cash of $50. Along with that, company is also giving the asset. Asset for which fair market value is $100. Net book value for the company is $80, guys. What is my total distribution value, guys? Total distribution value is correct. 50 and 100. 150. Is that okay, people? Now, I'm going to merge both the concept. This asset concept, which I discussed with you, plus the losses concept, I'm going to merge and do a one question here. Let's try that. Do it carefully, okay? Company is giving the cash, $100. Company is also giving the property for which net book value is 30. Fair market value is 20. Current year earnings and profit for the company is minus 20. Accumulated earnings and profit for the company is plus 60. What is going to be step number 4 value? That means what is going to be capital gains? You're saying 80, 50, 80, 80. Hmm. Any other answer? Let's say no one asked me the value of the basis, but okay, I think you're assuming basis is zero, right? No problem. Correct. So let's see. Are we going to adjust them, guys? Are we going to net them off? Yes, because current year is this. So it is coming plus 40. Nice. What is my distribution value, guys, here? Distribution value is this plus this 120. Correct. Now it's very simple. This is 0, 40, 0, and this is this. So it is going to be point clear, everyone? Ruchi clear? Mm. Should I move, guys, up till here? Anyone, any question? Can I confuse you more? If everything is clear. Lena, any question? Okay. Now, I'm continuously telling you that this is the distribution value. This is the distribution value. And I'm continuously giving you one value of the distribution, guys. Here also, if you see, we are having one value, 120. Previously also, I'm having 150 only. Here also, I'm having 150. So everywhere, I'm talking that you are making the distribution only once. I'm saying you are making the distribution only once. But is it mandatory company is making the distribution only once? No. Company can make it quarterly, company can monthly, company can make weekly, company can make daily, company can make 20 times in a day also. It's the company and the shareholder. Who are we to challenge that? So how to treat that? How to treat that is the next topic I'll start. So basically what I'm going to talk about, I'll talk about the multiple distributions. I'm talking about the multiple distributions during the year. Is the concept clear? I'll talk about how to do it. Is that clear? What are we doing? How to allocate, guys? How to allocate this? Allocation, everyone, is going to be current year earnings and profit. I'm going to allocate proportionately. Accumulated earnings and profits, everyone, we are going to allocate chronologically. In fact, everything after that, ROB, capital gains, we'll allocate chronologically. I have no idea what does that mean. I have no idea what does that mean. You will not get this for next 5 minutes, but automatically within 10 minutes, you will get this. First, copy this. Take a screenshot. Copy. Let's see. Company is making the distribution, guys. Distribution company is making $10,000. Company is having earnings and profits 2,000. Accumulated earnings and profits you are having 4,000. Shareholder is having a basis of 1,000. Quickly tell me the capital gains. That's all. Nothing unique. Same thing what you are doing till now. What is capital gains? Rani, Rina, what's your answer? Easy, something we have already done it, everyone. Um, this is going to be 2000. This is 4000. This is 1000. And capital gains, as you rightly said, 3000. Point here, everyone. What is unique here? This is something you have already done. Now, if I tell you guys, this 10,000, you are making the total distribution. But this distribution you are making per quarter. Per quarter, you are making how much? Per quarter, you are making 2,500. So 2,500 into 4 quarters, that's how you're distributing that. Point here, people. Yes, no, maybe. Now, let's see how I'm going to do that, guys. Stop doing everything, whatever you're doing it. Just see how we are doing it, everyone. Okay. Um, so I'm making quarter wise. How much I'm making every quarter? How much I'm having every quarter, guys? Quarter 4 and total. Right. So I'm writing here distribution, guys. Distribution here is 2,500, 2,500, 2,500, and total is 10,000. Which is the first amount I allocate? I allocate first to the current year's earnings and profit. How should I allocate? This is where that note comes. I'll allocate proportionately, everyone. How much is my current year's earnings and profit, people? How much is my current year's earnings and profit, guys? 2,000. So I'll allocate them proportionately. That means how much I'll allocate in per quarter, guys? I'll allocate 500, 500, 500, 500, 500, and total is 2,000. Is this point clear or not? Guys, I hope it is okay. So balance total is coming 8,000. This is coming 2,000, 2,000, 2,000, 2,000. Rina clear? Next I allocate here accumulated earnings and profit. How much is my accumulated earnings and profit? In this, how much is my accumulated earnings and profit, guys? 4,000. So should I allocate 4,000 also proportionately? 1,000, 1,000, 1,000, 1,000, 1,000. No, 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 no. See what are they saying? We will allocate chronologically, everyone. That means I'm not going to proportionate that, guys, but I'll go into the sequence. How much I am having? 2,000. So first I'll allocate that here. How much? 2,000 here. Now how much is left? Out of 4,000, 2,000 I have allocated. How much is left? 2,000. I have allocated 2,000 here. Are we left with any accumulated earnings and profits? No. Zero. Is this point clear or not, everyone? The total is 4,000 here. Any doubt here, guys? No. Sure. Whole point, Rina? What I was asking you to tell me earlier. Have you understood how I allocated the current year's earnings and profit? AEP. That's what I'm saying. Accumulated. How much AEP is that, Rina? How much is the AEP? What is the value of AEP? 4,000. I'll not allocate proportionately. I'll allocate chronologically. So first, I'm going to allocate 2,000 here. So out of the total 4,000, 2,000 I have allocated to Q1. How much is left? 2,000, which I'll allocate in this, whatever is coming in the next in sequence. How much AEP is left, Rina? Nothing. Zero. Zero. That's what I'm saying. Point clear? Yes, no. Okay. Let's try the various version. Let's try the various version. Let's say, guys, my AEP. I'm just telling you for your help only, guys. Let's try the various version of that. Let's say, everyone, if my AEP is 1500. How much should I write in the Q1? 1500. How much should I write in the Q2? Nothing, nothing, nothing. Good. Let's say my AEP is 4600. How much should I write in Q1? 2000. How much in Q2? 2000. How much in Q3? 600. Is this clear how we are doing it? Everyone, should I move? Perfect. That is the meaning chronologically. Ashraf, clear? I'm just pasting what we have done. So we are having 4000 here, 2000 here, 2000, 0. Current year is done, accumulated is done. What is the next thing we do? We do reduction of the basis. Reduction of the basis. How much is my basis? 1000. Now everything I'll allocate in the chronologically, everyone. That means which quarter should I reduce now? Q1, Q2, Q3, Q4, Q3. This is finished. How much? Should I do 500, 500? No, entirely chronologically now. This is 0, this is 1. So how much is that? 3000, 1000, 2000. What is this 1000, 2000, guys? What is the 1000, 2000? This 1000, 2000 is what? That is nothing but the capital gains. You have told me so before. I took so much time. You have told me much earlier. Is this clear how I'm allocating this, guys? Everyone? Any doubt? No? All right. My screen is not working. Please try one question on your own, guys. Only then you'll get this. Company is making the distribution to the shareholder, guys. Distribution amount, what you are making is 30,000. Basis, what you are having is 2,000. Current year earnings and profit is 15. And accumulated earnings and profit is 10. First, without anything, calculate the capital gains, guys. Is it the same question we have done? No. No. Rina, what is the capital gains? This is simple. This is going to be 15, 10, 2. Is this okay, guys? Any doubt? Yes, no? But if I tell you this is the total amount, I'm making per quarter. Per quarter, how much you are making? Let's say per quarter you are making 7.5. 7,500 per quarter you are making. Is that okay? I have a question. This 3,000 which is coming from which quarter? Is coming from which quarter and how much is coming in which quarter? The way we have done it, it was 3,000 total but 2000 is coming from quarter 4, 1000 is coming from quarter 3. Similarly, this total 3000 is coming from which quarter? Do that, guys. Do the same way, the way I have done it. Try, guys. It's a little tricky. Q4. So you are saying Ashraf, entire 3000 is coming from Q4? Okay. Let's see. Everyone, you should try the questions. So every quarter it is 7500. I'll quickly do that. So 7500, 7500, 7500, 7500. Now I'm doing the current year's earnings and profit. So that means how much each quarter is going to be, guys? Each quarter is going to be 3750. Am I right? 3750. So yeah, proportionately, if I take 3750, Total is 30,000. And from the total, we are reducing 15,000 like this. Total is coming 15,000 guys. Now, I'm going to reduce accumulated earnings and profit, but we are going to reduce here chronologically, everyone. So 3750 will go from here. 3750 will go from here. And 2500 is left, will go here. Nothing here. So this is 10,000. How much is that here? 5,000. Nothing here, nothing here. This is 1250. This is 3750. Next we are having is the reduction of the basis. Reduction of the basis is 2,000. So we'll go from here and 750 from this. So 0 here, 2,000. Correct? Entire amount is coming from this. Is that okay, guys? Is that okay? Was she clear? Charlie? Okay. On this category, I'm doing the last question. And please try, it's up to you. Try a question. This is little tricky, little different question. Okay. So try this question again. Distribution amount is 20,000. Basis what the shareholder is having is 4,000. Current year's earnings and profit is 4,000. Accumulated earnings and profit is 4,000. What is going to be capital gains first of all? Tell me what is capital gains. This is 4,000. This is 4,000. This is also 4,000. Balance whatever 20,000 minus 12,000, 8,000 is capital gains. Guys, point clear? Everyone? Charlie clear? Now, if I tell you that the distribution what you are making each quarter, quarter 1, 2, 3, 4, it is 8,000, 8,000, 2,000, 2,000. Is that possible, guys? Is it mandatory that you have to have the equal distribution only? No. I'm having a different distribution. Do this question. Do this question. There is a reason I'm telling you to do this question. Tell me this 8,000 is coming from which quarter? Try, guys. Good. Try 0611. Everyone, not sure what's the answer. Okay, what's your answer? All right, let's try the question together. 8822. So correct me wherever I'm wrong. So 8,000, 8,000, 8,000, 8,000, 2,000, 2,000. So it is 16,000, 4,000, total is 20,000. Great. I'm going to reduce current year earnings and profit. How much is my current year earnings and profit? It's 4,000. So how much should it be? 1,000, 1,000, 1,000, 1,000. So total is 4,000. Is that okay, people? Everyone? Shalini, Reena, guys, Ashraf? No. I told you guys that it is going to be proportionately, but proportionately does not mean period wise. Proportionately is going to be distribution amount wise. By chance, in our question, it is coming same. So I'll not divide it by 4, guys. I'll allocate in the ratio of 8822. Point clear what I'm saying, guys? Everyone? Reena clear? Rani? So everyone, um, how much is my current year? It's 4,000. So I'll allocate 4,000. 8 divided by what? 20. How much is that coming? That's 16. Is this okay or not? Any doubt? Ruchi clear? Ashraf? Charlie? Good. 1,600, 1,600, 400, and 400. Now it is 4,000. That's it. That's the only tricky point in this topic. I want to do it. Rest everything you have already done it correctly. So this is going to be 16,000. Now 6,400, 6,400, 1,600, 16. Problem is not with the accumulated earnings and profit, guys. That's very simple. That's any which ways chronologically. So 4,000, I'm going to do it. Correct. It's proportionate of distribution amount always, Shalini. Correct. Nil here, nil here, nil here, and this is 4,000. Now this is coming 2400, 6400, 1600, 1600, and 12. Now I'm talking about the reduction of the basis, which is again 4000. So this is going to be 2400, 1600, nothing, and this is 4. Lastly, it is nil 4800, 1600, 1600. That's how the breakup is. Clear, everyone? Many a times, guys, many a times, how I've got this 1600. 1600, I'm just doing that. 1600, I got it because 4000 I am allocating into 8 by 20. Point clear? How I got the 1600? Because I have done 4000, which is current year, multiplied by 8 by 20. That's why I'm getting it. Point clear, guys? Sometimes everyone in the MCQs, you will see that whatever is that 8 by 20, if can you please convert them into the percentage and tell me the value? 8 divided by 20, it should be 40%, right? So 40%, 0.4, you can say that. So many a times, guys, maybe in some MCQs, you will see they have converted that entirely into percentage. So that means 40%, 40%. This is going to be what? 10% and 10%. And then they are multiplying that. Point clear what I'm saying? So 4000 into 40%, 4000 into 40%, 4000 into 10%, 4000 into 10%. It's the same thing. Whether you do this way or you convert into the percentage and do it. Point clear what I'm saying, guys? No, not clear. Rina, clear? I'm just specifically telling you, but because whenever you're looking the explanation of any question, you don't get confused with that. It's just a way of doing the maths only. That's all. Okay, Ruchi, clear? One tiny question based on what you have done it just now, and then we'll wrap this topic. Company shareholder. Sure. Let's finish this question, Rina, then we'll take a break. We are making the distribution of 90. Current year's earnings and profit is 27. Accumulated earnings and profit is 40. Basis the shareholder is having is 15. Tell me capital gains. What's your answer? Current year is 27. Accumulated is 40. Third, this is 15 and this is 8. Whatever is my balance figure. Great. If I tell you this 90 which I'm doing, I'm making the half yearly distribution. First half, second half. I'm making 30 here and 60 here. Is that possible? I'm making half yearly contribution like this, half yearly distribution like this, and that to not equal. Possible? Why not? You can do anything, whatever you want to do. Question, this 8,000 which is coming, how much is coming from H1? How much is coming from H2? I have not done quarter this time. I'm doing half yearly. Tell me this 8 is coming from which half year? Remember 30, 60 now. Whole amount, Reena, entire amount, whole amount, Ruchi. Hmm. Let's try 30 and 60. Brilliant. First half, second half, total 30, 60, 90. I'm having current year's earnings and profit, which is 27,000. Should I split equal? I'll come back to Ashra. Uh, so this is coming 9 and 18. This is coming 21 and 42, right? 62. Now I'm having AAP. AAP I'm going to allocate like this and 19. So which is what? 40. 0, 23, 23. Then I'm having a reduction of bases. How much? 0, 15. This is 8. Absolutely right. This is coming all from here. Is that okay? Shalini, is that okay? Ruchi, if current year is negative and at positive, and balance after is to distribute. Correct? Ashok, what do you think? In fact, many complications can happen. This is positive, this is negative. But in your course, it's not here. In fact, if you see, distribution topic in itself is a quite big topic. I discussed this topic in EA classes, which is much more deeper into the taxation, everyone. I take this EA classes only four lectures only for the distribution. But in your course, we don't have that much detailing into it. But what you're saying is correct. Obviously, we'll limit ourselves to the CPA only. I'll not unnecessarily diverge into the details, which is not necessary for you. Okay. Now we can stop first for a break. But before that, anyone, any question? Should I move? Reena, any question? No? Great. I'll continue the topic, guys. I'm going to see you at 9:10. Thank you. Hi, guys. Have you joined? Please confirm quickly. I'll start then. Ruchi, Reena, have you joined? All right. Rina, have you joined? Even from um, hmm. If the company is making the distribution, is that possible company is giving assets also in the distribution? Just now I have done with you. You can do that. You can do that. Let's say company is giving the asset for which purchase price is $100 and company is giving then the fair market value is $60. Company is also giving the cash of $10. How much is my distribution value, guys? What is my distribution value? Correct. Distribution value here is this plus this $70. Brilliant. Hmm. Whenever company is making the distribution, everyone, whenever, especially whenever the company is giving the assets, assets can be of how many types? Two types. What are the two types? AP, DP. AP, DP. AP means no, Rina. Why current asset now? Yes. AP, DP. AP means appreciated property. DP means depreciated property. AP means land. Correct. DP means plant and machinery, on which I will charge the depreciation. Here I mean on which I will not charge the depreciation. Correct? Is that okay? Correct? Yes, no? No, Ruchi. No. Is that how you have classified the APDP? People, is that how you have classified the APDP? No. You have done that already. AP means whenever what is higher, net book value or fair market value? Whenever fair market value is more than net book value. Here, net book value is more than fair market value. Is this okay or not? Everyone, should I move? If, if company is giving the AP, should the company recognize the gain, guys? What do you think? Yes, you will recognize the gain. Same fundamental. If you sell it outside and then whatever the cash you are having, you give to the shareholder. No, not on the sale, Veena. I'm saying company is giving the appreciated property to the shareholder. Still, company will recognize the gain because it is having the same fundamental. If company is not giving the asset to the shareholders, company is selling outside and recognizing the gain. So to avoid that, company started giving the appreciated property to the shareholders. Hence, whether you are selling it or whether you are giving the appreciated property to the shareholders, you will recognize the gain. The way we have done it, guys, in case of our shareholders. Point clear? No, not clear. Rina, clear? If company is giving the depreciated property, are they going to recognize the loss? Same fundamental, ditto, same concept, everyone. I'll do at many places. Many places I'll do the same concept. You will not recognize the loss. Is this point clear or not, guys? Everyone? Should I move? Company is giving to the shareholder. Company is giving an asset. In the distribution, everyone, in the distribution, company is giving any asset. Let's say you are giving the asset for which fair market value is 100, net book value is 80. Is company going to recognize the gain? If yes, how much? gain is going to be $20. If the net book value is 180, how much gain or loss? How much gain or loss? Nothing. Zero. There we have done it. If shareholder is giving, we recognize we are having section 351. Do we have the similar thing here also 351? No, there is no 351 here. That means whenever the company is giving the appreciated property, always you will recognize the gain. There is no concept like a 351 here, guys. Point clear, guys, what I'm saying? Everyone? Okay. Company is giving the appreciated profit. Company is giving the property, guys, to the shareholders. Question is, what should be the basis of the shareholder, guys, in the property what you're receiving? What is going to be the basis of the shareholder in this case? Basis for the shareholder is going to be fair market value. Fair market value. Is it the same basis, guys, what you do in the, is it the same basis what you do in the step number 3? No, no, no. Step number 3. No. Is it the same thing we do in 1, 2, 3? Reduction of the basis is the same thing which we do in the reduction of the basis? No. That was basis of a stock. This is different. This is, I'm saying, whatever the property I'm receiving, what should be the basis of that? Point clear? Ashraf, clear? Should I move, guys? Great. So just to summarize everyone, whenever company is making the distribution to the shareholder, so maybe if you are giving cash, then obviously company will not recognize any gain or loss. What is the distribution value, guys, for us? Whatever is the cash given. But if company is giving any appreciated property, then here you will recognize the gain, which is fair market value minus net book value. How much is the distribution value? Whatever is the fair market value of appreciated property. But if company is giving the depreciated property, is the company going to recognize the loss? Yes or no? No. And here again, fair market value of depreciation. Is this okay? Should I move, guys? Rina, clear? Let's try one question. Company is giving cash, $10. Company is also giving the property, for which fair market value is $50. Net book value, let's call it also $50. Shareholders basis, right? Shareholders basis is 0. Current year's earnings and profit and accumulated earnings and profit is 100 and 0. What is capital gain price? What is my distribution value, guys, here? What is my distribution value? 50 plus 10, 60. Good. After that, simple. 1, 2, 3, 4. 60, 0, 0, 0. You're absolutely right. Hmm. Company is making the distribution tax. I'm telling you, company is giving two assets. Asset one, fair market value is $100. Net book value is $100. You are giving asset two. Fair market value is $30. Net book value is $45. How much gain or loss company will recognize? I'll recognize here $80. Here I will not recognize the loss. Can I not do this, guys? Can I not say that my total fair market value is 130, this plus this, and this also 65? That means how much? 35 and 30. 65 should be my gains. No, I'm not going to merge like this, guys. We will not merge and adjust anything, guys. We are going to calculate gain or loss asset by asset. We will calculate the gain or loss asset by asset. Point clear, guys, what I'm saying? Clear, clear? Ashraf, I'm just writing a note. No, we are not going to merge it. We'll keep it separately. Whenever I'll go back and see that. Whenever the company is making distribution, whenever company is making the distribution of multiple assets, gains to be recognized on asset by asset. Losses are not recognized. As you run copying. Done. You are saying distribution value. Yeah, distribution value would be there. Ashra, no problem. We take fair market value for distribution value, which is 3131. No problem. But I'm saying company will not net them off. Company wise gain or loss, I'll not merge them. Should I move, guys? Okay. Company is making the distribution wise. Current year's earnings and profit is 70. Cash they are giving is 10. They are giving the property for which fair market value is 50. Net book value is 10. Basis of the shareholder is 0. Tell me 1, 2, 3, 4. What is 1, 2, 3, 4? 63000. Hmm. Hmm. What is my distribution value? Distribution value is this plus this 60. Simple. So this is going to be 60, 0, 0, 0. How much gain company will recognize, guys? Company will recognize 40. Absolutely. Okay. I hope it is okay, guys. Now, about appreciate property, I'm going to do one very important question. But before that, I want you to read from the, I've done the multiple distribution point with you, which we have not read from the book. Let's quickly read this from the book also. Then I'll move to the appreciate property. Same matching the data, cash, dividend to this. Same we have done it current year accumulated. Read this, guys. Same multiple distribution point we have done it, page number 17. Read and confirm, please. Is it clear? Veena, is that clear? This is simple, guys. Year one, Linda Corporation, a C corporation, has the current year's earnings and profit is 15,000. Accumulated is 10,000. No problem. You have made the forecast distribution in February. Let's do it. You tried this guy question. I think this is simple. You do that, guys. Unnecessarily. It's very confusing. Let's see that, guys. Year one, Linda is having current year earnings and profit is how much? Is 15,000, guys. Accumulated I'm having is how much? 10,000. You are making cash distribution. How much? 7,500 into 4. So total I'm making the distribution of 30,000. Guys, point clear what I'm saying? Everyone? Yes, no? Now, let's do that, everyone. How much we are having? 7,500. 7,500. 7,500. 7,500. 7,500. 7,500. Now, first, everyone, I am having how much? I am having current year earnings of 15,000. So how much should I allocate, guys? How much should I allocate in each four? It should be 3,7. Yeah, value wise. How much is the value wise? 15,000. 3,750. Good, Ruchu. 3,750. and 3750. Ashraf, clear? This is coming 3750, 3750, 750, 3750. So current is finished. Now accumulated earnings and profit. Accumulated earnings and profit. How much will go here, everyone? How much is that? 10,000. So 3750 will go from here. Finish. 3750 will go here. Finish. How much will go here? 2,500, I think, right? Is it correct? 7,500, correct. So 1,250, balance, isn't it? 3,750. On that, I will allocate the basis after that, and I'll allocate the capital gains after that. Simple. Easy. Read that quickly. See, questions are very easy in the book, guys. It's just the way they have presented, it looks complicated. Read this question. It's very simple. You have done much complicated than this. As you're done reading, is it clear, everyone? Charlie, clear? Okay. Now, I can move. I want to, as I discussed, one uh, appreciated property concept, which I want to do. See that question. Company is giving to the shareholder. Company is giving to the shareholder. Let's say you are giving any property. Property, what you're giving, for which the fair market value is $50. Net book value is $10. Company's current year's earnings and profit and accumulated earnings and profit, both of them is zero. Is that possible, guys? That both of them is zero and still you are making the distribution? Why not? We have made the distribution when the value is negative. What is the problem in zero? So I can make that, no problem. Shalini, clear up to here? Shareholders basis, guys. Shareholders basis is $10. What is going to be step number 4? Everyone try this question. It is extremely and very important question. What is capital gains? $40, right? There is a reason I told you this is important topic. Mhm. Let me drop you a hint. I'll give you a hint here. Hint is, which kind of a property is that? APDP. AP. That's the hint. That's the hint. Think. Agreed. What else? Not clear, guys? No? No problem. Let's do it together. Come on, let's do it together, guys. People, it's an appreciated property. So that means, is the company going to recognize the gain here? People, Reena, is the company going to recognize the gain? Yes. How much gain? You're absolutely right. You will recognize the gain of 40. But when I'm recognizing my gain, guys, are we not going to increase the current year's earnings and profit? Absolutely, yes. Whenever I'm having the gain, am I not going to increase my earnings and profit? Yes, we'll increase that. So now my current year's earnings and profit is not 0, rather it is 40. Now it's simple. This is going to be 40. This is going to be distribution value is 50. So 0. This is 10. This is point clear, everyone. Reena clear. Ruchi, Ashraf. So be careful about this, guys. I'm just writing it. Be careful. Whenever question is all about appreciated property, guys. Question is about appreciated property. Company is going to book the gain, and with that gain, you will increase your earnings and profit. Be careful about this. This is where they can confuse you a lot in the MCUs, guys. They'll play around here. Should I move? Take a screenshot if you want. Now, simple. Let's try one question on this. Now we have already understood the concept. Current year's earnings and profits and AEP. Current year's earnings and profit is 10. AEP is 0. You are giving the property. I'm just doing the same question, Ashraf. You should ask something else. You're saying if it is already given, see that you should do this question, you will get this answer. Fair market value is 100. I think same question you're asking. I've given the value here in current years. 70. And let's keep it simple. My basis here is 0. Tell me the basis value. Tell me, yes, Shalini. Tell me capital gains here. Tell me step 4 value. Dina, what is the distribution value you are taking? Does not look correct to me. As in your answer 30 does not look correct to me. Sixty. Ashraf, what's your answer? Yeah, it should be okay. Okay, let's see. Guys, what is my distribution value here, first of all? Distribution value is 100. 100. How much gain are we going to recognize here? Gain we are going to recognize 30. So I'll add 30 here, guys. After that, where is the confusion? 1, 2, 3, 4. 1 is 40. 2 is 0. 3 is 0. 4 is, what's the answer? 60. Clear, everyone? Clear? Veena, Ashraf, Shalini? Okay, let's do one more. I was expecting people to do it, but no problem. Let's try one quickly question and then I'm going to move. Current years is 0. Accumulated, 0. I'm transferring fair market value is 100. Net book value is 10. Basis here is 0. What is going to be 4? Gain would be recorded by both. I'll come back to that. Shall I do this question? I'll come back to this. Your question again. Okay. And guys, Shalini, what's your answer? How much is distribution value, guys, here? Distribution value is 100. Is company going to recognize the gain here? Shalini, is the company going to recognize the gain here? Yes, because it is appreciated property. So we are going to recognize the gain of 90. Simple, add it here, 90. So what is 1? 1 is 90. What is 2? 0. 0. 10. So correct? 10. Shalini, I think your question is, you are saying shareholder is recognizing 10 and company is recognizing 90. Is that what you're saying? Yeah, but both are different things. Can be different. Most of the time it is going to be different. Shalini, it has no connection. Please don't link it. Though it is also gain here, it is also gain here. But this is the gain which is happening because you are transferring the appreciated property. This is the gain which is happening because of the distribution in that case. This value most of the time are going to be different. See 90, 10, see 30, 60. Don't link that. It's absolutely chalk and cheese. They have no connection with it. It's just a coincidence. We are calling that also gain and here also gain, but it has no connection with that. Point clear, Shalini, what I'm saying? Now, net book value. What is the other name of the net book value, guys? Net book value, guys, we also known as net book value is a more accounting terminology, right? Net book value is more accounting terminology. This is something you will read in FAR. When you're going to discuss the US GAAP, we call it net book value there. It's more accounting concept. In taxation, everyone, in taxation, we generally call it basis for that. We also call it adjusted basis for that. Okay. So everyone, when I'm talking about net book value is this, that means I am talking about basis, everyone. Point clear or not, guys? So in a way, I'm talking about basis, guys. Till now, I have done with you 3 bases, guys. You will get confused in the basis. So let me clarify that. Let me clarify this. This basis of 10, guys, which I have written here, and this basis of 0 are the same. Are the same, guys? No, they are not same. They are not same, everyone. They are not same. There are 3 bases, everyone. First, shareholders' basis in the stocks. Whatever is your basis in the stocks, which we consider in 3. In reduction of basis, I consider this. Point clear or not, everyone? That is shareholders' basis. Second, everyone. Second is, now company is giving the asset, everyone, to the shareholder. Company is having a basis also. Basis of what? Basis of the outgoing asset. Whatever the asset you are giving to the shareholder. Is this okay? Both the bases are clear, guys. So this is something I'm looking for a company perspective. This is from a shareholder lens. Is this okay or not? Ashraf, Reena? Guys, not clear. Let me know. I'll repeat that. Should I repeat? Clear? Sure, Reena. Should I repeat? Okay. So what I'm saying, don't wait for me, no, that I'll ask you, then you will tell me. You should ask on your own. Okay. What I'm saying, Reena, we have done 1, 2, 3, 4. In the third, we are talking about reduction of the basis. Which basis is that, Reena? That was the shareholders' basis in the stocks. Is that clear? That means how you become the shareholder of the company because you paid the money to the company. So this is that stock basis. Point clear? Second, which I'm saying, Reena, in this case, you are taking net book value. Remember, here you are taking net book value. Net book value is also known as basis. So which basis is that? Your asset which is going, let's say asset which is going for which fair market value is $100. And I'm saying net book value is $80. Clear, Reena? So how much gain the company will recognize? How much gain the company will recognize, Reena? 20. Good. 20. But this net book value is nothing but the basis of the company. Basis of what? The asset which is going for the company, the asset which is going, what is the basis of that? So I'm saying basis is going to be here $80. Point clear? Basis of what? Basis of the outgoing asset, the asset which is going. Point clear? You know. Third basis. Third basis. Guys, is that clear or not? Now this asset, shareholder has received this asset. Shareholders has received this asset. Now shareholder will value what should be the basis of my property which I'm receiving. So that means shareholder will say basis of incoming asset. Basis of incoming asset. Is this point clear or not? What is the basis of the incoming asset? Fair market value. Fair market value. Same fundamental which we have done it, guys. Remember, whenever transaction is taxable, we take the basis as net book value. Remember, and period of holding will start from original date. Remember, people? Yes, no? Yeah, Ashraf, clear? Shalini, clear? Only one person is awake, rest everyone is sleeping. Guys, when it is taxable, I don't take not net book value. I take fair market value. And this would be from date of transfer. This would be whenever it is non-taxable. Clear? Everyone, clear? Ruchi? So everyone, this transaction, that means whatever the distribution company is making, is this taxable? Yes, it is taxable. That's why I'm taking fair market value. Is this point clear, guys? Any doubt, any question till now? Should I move if it is okay? Yes. All good, guys? Okay. Now let's mix all the concept and let's do one comprehensive questions on that. Company is giving property to the shareholder in the year 2024, and shareholder has sold this property in the year 2030. Now, if I tell you current year's earnings and profit, accumulated earnings and profit, both of them is zero. Property, what you are transferring everyone, for which fair market value is 100. Net book value is 120. Shareholder is having a basis of what? Basis of stock. Basis of the stock shareholder is having 10. In future, when you are selling what? This property, what you are receiving. The property which the shareholder is receiving, shareholder is selling in future in 2030. You are selling this property for $130. Is this premise clear, guys? Everyone? Question is, how much gain company will have it? How much gain shareholder will have it when you are distributing that? And when you are selling in 2030, how much gain then you will have? Three gains I'm looking. One, when the company is making the distribution, what is the gain? When shareholder is receiving, what is the gain? When shareholder is eventually selling that property, what is the gain? Bye everyone. All right, let's do that. 20, 50, 50. Different answer. No problem. Let's do that. I'm doing it, guys. Do with me. Come on. First of all, always try to calculate what is my distribution value, guys. Here, what is my distribution value? Charlie, what is distribution value to achieve? Correct. No confusion here. 100. Very good. How much gain company is going to recognize, guys, here? No, Charlie. It's a net book value. It's not a AP. It's a DP rather. Since it is DP, no gain. Point clear? Zero. Clear, Charlie? Okay. 1, 2, 3, 4. Charlie, clear? Now, distribution value is this. So this is 0. This is 0. This is 10. What is 4? 4 is 90. Okay. So 0, 90. Now, what is going to be my basis of the asset which I'm receiving here, guys? Fair market value. I'll take 100 here. So my gain here is 50. Correct. So answer is 0, 90, 50. 0, 90, 30. No one got it absolutely correct. Sharmi got the last one correct, but this is wrong. I hope it is okay, guys. Everyone, Ashraf clear? Guys clear? Any doubt here? Ruchi clear? Let's try one. Let's try one. 60. You are selling for 30. Gain here, gain here, gain here. Hi everyone. And guys, just two answer, three answer. Everyone, 40, 50 loss. 40, 50 loss. 40, 50, 50 is a loss or a gain? 50 is a gain or a loss? It's a gain. Hmm. Let's see. Okay. Mhm. Now, uh, first of all, what is my distribution value, guys? Distribution value is 100. Good. It is appreciated property, so I'll have a gain here. How much is my gain? 40. So I'll add 40 here, guys. Good. Now, one, two, three, four. I think everyone is getting 40. First answer is correct. Everyone is getting the same. 40, 50, 70, 40, 50. Yes. Okay. Now, one is 40, 0, 10, and this is 50. Correct. So I think this is also okay. 40, 50. What is my basis here, guys? What is going to be my basis here, guys? Rina, what is my basis of the property? Basis 100. Fair market value is the basis, guys. Point clear? Rina, point clear? So it is 100. So you are saying we are having a loss of 70, guys. Are you sure? Guys, but we have not done that. We can't have a loss, isn't it? That we can't have a loss. Can we have a loss here, guys? Yes. See, whenever you are selling the property, obviously you will have a loss, guys. There is no doubt about this. Here in step number 4, you cannot have it. Otherwise, I can have a loss. So yes, 40, 50, loss of 70. Very good. I hope it is okay, guys. Point clear, everyone. Will I move? We'll do 15 minutes more and then we'll wrap, guys. Okay. Year is 2024. For convenience, current year and accumulated are both of them are 0. Okay. Basis everyone of the shareholder is 10. Company is making the distribution, everyone. Distribution of 40. How much is capital gains, guys, here? One, two, three, four. 0, 0, 10, 30. So capital gains is 30. Do you know clear? Now, here, everyone, before I start the next year, everyone, what is my basis here, guys? Next year, my basis is not 10. Is my basis not 10? No. Once the basis is reduced, it is going to be reduced. Basis is 0. Point here, guys. Let's assume next year I'm having the same thing. Current year and accumulated, again, it's 0. And again, I'm making the distribution, guys. Same distribution. I'm making the distribution of 40. Now, how much is my capital gains, guys? Correct. Good point. This is going to be 0, 0, 0 now, and 40. Is this point clear or not, everyone? So that means if in any year, let's say if in any year, everyone, let's say in 2024, my basis has been reduced. So basis would be reduced. It is not going to automatically increase. Is that possible, guys? That in my future, is that possible in the future, basis is increasing? Is that possible for you? Any case, in any case, would that be possible that the basis is increasing? Is there any way you can increase the basis? Yes, possible. Why not? You purchase more shares. Purchase more shares, guys. If I purchase more shares, automatically my basis will increase. Point clear or not? What I'm saying, guys? Everyone clear? Dina clear? Ruchi clear? Let's read up to here from the book. Yeah, obviously, for the same stock, it is not going to be. I'm talking about overall for you, the basis. Okay. Now, I'm here, page number 19. See that, everyone? Okay. Is that possible a shareholder is a company? Is that possible shareholder is a company? Yeah, why not? Shareholder can be a company also. Can be a company also, an individual also. So another company, you are a shareholder. You guys have not done it, but whenever you are making the dividend to these guys, whenever you are giving the dividend to these guys are eligible to get the deduction for it. We call it DRD. We call this DRD. I think Ruchi, might have done that. This is something we will discuss that in the reg. So companies get the deduction for it. If I'm receiving that dividend, I get the deduction for it. Individual does not get the deduction for it. This concept, don't worry, we'll discuss in reg. So you see in the reg, guys. Point clear? Let's see that. Page 19, everyone. Taxable amount of a dividend from a corporate earnings and profit depends what type of entity. You are receiving cash, then whatever the amount you are receiving would be taxable. If you are receiving any property, then whatever is the fair market value would be taxable for you. If you are a corporate shareholder, then again, whatever the amount you're receiving, whatever the profit, but you will be eligible for a deduction, which we call it DRD, guys. This is something you will read in reg, guys. Is that okay? Ashraf, clear? This is simple, guys. Read that. If you are giving the property, guys, if you are giving the property, everyone, if you are giving the appreciated property, are you going to recognize the gain? Yes, you will recognize the gain. Same. Fair market value minus adjusted basis, you will have the gains, everyone. Corporation recognize the gain as if the property has been sold. But if you are distributing the depreciated property, are we going to recognize the loss? No. Corporation cannot recognize a loss. No. What is going to be, if I'm giving the appreciated property, what is my distribution value? Fair market value. If I'm giving depreciated property, what is my distribution value? Fair market value. See that? Shareholder, the recipient shareholders include the fair market value as a dividend to the extent of the earnings and profit. Whatever the earnings and profit, I'll include that. Similarly, dividend is taxable to the shareholder, everyone. Basis in the property is going to be fair market value. Shareholders' basis in the property is fair market. I hope it is okay, people. None of it you have to do it. None of it you have to do it, guys. If you have made the notes, if you have made the charts, you don't need to do any of it, guys. I hope it is okay. Tina, clear? Company is making the distribution to the shareholder, guys. Whenever you are making the distribution, guys, okay, how do you, okay, if I make the normal PNL, I hope everyone understand how to make the PNL. How do you calculate? You will say, this is my profit before the tax. From this, I'm going to reduce the dividend. And from this, I will reduce the tax and I'll get that. Am I right? Is that correct? Is that how you calculate the PAT, guys? From PBT, we reduce the dividend. And from that, I reduce the tax and get the PAT, everyone. Everyone, Ashraf, Veena, no, that's wrong. Dividend is not the expenditure reduction. It will come underneath that. Now it is okay. This is okay. Dividend is not the expenditure, everyone. It is more appropriation of the profit. So I'll not get the reduction for it. Point clear, guys, what I'm saying? Everyone? Yes, no, maybe. But, whatever is my profit, let's say my profit is 100. And out of that dividend, I'm paying, let's say 10. How much is balance? Balance is 90. Where this 90 will go? 90 will go to retained earnings, reserve and surplus. But I'll reduce the dividend amount from this. Point clear, guys? The dividend amount which I'm reducing, it is not the expenditure reduction, but obviously I have to reduce from that and balance whatever I'm having will go to my retained earnings. Point clear, guys, what I'm saying? Yes, no. Similarly, everyone, similarly, whenever company is making the distribution to the shareholder, guys, let's say company is making the distribution of $40 to the shareholders. Let's say it is having earnings and profit of 100. Whatever the distribution you are having here, I'll reduce from here also, guys. I'll reduce the distribution value here also. How much? 40. So what is my closing E&P, guys? Closing E&P 60. Point clear or not, guys? This is not the expenditure reduction. It's just like I'm distributing the profit. With that, I have to reduce my earnings and profit. Guys, is this okay or not? Everyone? Any doubt? Ruchi clear? Reena? Shalini? I'm confusing a bit more. In here, I'm taking 1, 2, 3, 4. Shareholder is calculating 1, 2, 3, 4. For the purpose of 1 and 2, I'm taking earnings and profit, right? I'm looking earnings and profit of the shareholder. Which value should I look? Should I look for $100 or should I look for $60? Point clear what I'm saying? Correct. I look for $100, not $60. Point clear, guys, what I'm saying? Yes, no? Yes, no, maybe. Is this okay? I'll do it with a different example, guys. Let's see. Let's say someone's salary is 50,000 rupees. Okay. And that person is deciding, should I purchase a mobile phone or not? This person is deciding, should I purchase the mobile phone or not? Let's say the mobile phone, if the person purchase, then the mobile is 30,000 rupees. So person is left with 20,000, guys. Right? Now, when you are deciding that should I purchase the mobile phone or not, obviously you will look your salary, guys. In that case, you are going to look your salary for making the payment, that do I have the money to purchase the mobile phone or not? Obviously, you are not going to look this. Point clear, guys, what I'm saying? Same here, everyone. When I'm looking 1 and 2, I'm looking the before the distribution value, guys. Should I move? Yes, no, maybe. Quick question. Quick question. Is this possible that I'm increasing my earnings and profit? Have you done any scenario where you're increasing your earnings and profit? In any scenario, are you increasing your earnings and profits? Good point, Ashra. Good point. Whenever you are having the gain. Good point. So everyone, if I tell you that my earnings and profit is 100, okay, and you are making the distribution, mm, you are making the distribution, uh, uh, for which fair market value is, let's say, 60. Net book value is 10. So how much gain should I recognize here, guys? Gain is 50. Point clear, guys. I'll recognize 50. So this is coming 150. How much is the distribution value here? I'll reduce that distribution value, guys. 60. So what is my closing ENP, guys? Closing ENP is 90. Is this okay or not? Everyone? We know clear? Again, the same question. For the purpose of 1, 2, 3, 4. In fact, for the purpose of 1 and 2, which value should I take? Should I take 100? Should I take 150? Should I take 90? Brilliant. Brilliant. Very good. I have done this, or we have already done this, guys. We take 150. We take the appreciated property. Point clear value, guys. I hope it is okay, guys. Should I move? Any doubt till now, guys? Yeah. Okay. Company is having earnings and profit of $100. They are making the distribution of $40. Please tell me closing ENP. Very good. I'm going to reduce 40 from here. So this is coming 60. Company is having 100. Okay. And they are making the distribution of 120. Is that possible, guys? That I am having earnings or profits of 100 and I'm making the distribution of 120. Possible, guys? Yes. Very much possible. We have done many scenarios. We have done many scenario when it is zero, when it is negative, still I'm making the distribution. What is my closing ENP, guys? It's minus 120. So should it not be minus 120? No, it is going to be zero, everyone. It is going to be zero. I'm writing a note here. distributions cannot create or produce deficit. That means I cannot have a negative ENP because of the distribution. This note is very important right now. It is not so important right now, but when we are going to do the S corporation, this is going to be important for us. Copied. Should I move? Down. Wait, I'll take 5 minutes more, then we'll wrap, guys. I just want to finish this topic. I'm confused. I'm slightly confused. Tell me. I'm saying we can't have the negative ENP. Right now, I've just discussed a note that I can't have negative ENP. But I have done the question, guys, that your current year is negative, accumulative is negative. Remember, I discuss here minus, 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 plus, plus, minus, plus, plus. Remember, these scenarios we have done it. But there also you are having the negative, isn't it? You are having negative then. Now I'm saying I can't have the negative. Problem clear? There I was doing the negative values were coming, negative ENP was coming. And now I'm saying negative is not possible. How is it possible, guys? Ashraf, clear what I'm saying? Guys, point clear what I'm saying? No, there's a difference. Good point, Ashraf. That negative is possible because of my operations, my business. If I have done the sales of 100 and my cost is 120, obviously you will have a loss. No, that's okay. That is okay. Because of that, you can have it. But what I have written here, because of the distribution, you cannot have a deficit. Guys, this point is clear. Everyone? Rina, clear? Guys? Should I move? One tiny last question and then we'll go. Good point, Ruchi. Company is having earnings and profits negative 10. That means you are having loss. Company is making a distribution of 100. Is that possible, guys? Minus 10 is the loss and I'm making that possible. None of our concern. My basis, everyone, here is 10. Can you tell me what is 1, 2, 3, 4? So 1 and 2 is going to be how much? 0. 3 is 10. This is 90. 90 is going to be 90. Is that okay, guys? Now, what is my current year's earnings and profit, guys? I'll reduce distribution, guys, here. How much is my distribution? 100. So what is my closing E&P, guys? Zero. Any other answer? Because of the distribution, I cannot have the negative. Am I right? That's why you're saying 0. No, it will be minus 10. See, whatever is coming negative because of my business losses will continue. No, just because I have done that distribution, I will not make it 0. Point clear what I'm saying, guys? Everyone, Ashraf, clear? It's not like that you are dipping into the Ganga and your entire sins are gone. If you are having the loss, distribution is not like that you're taking a dip in somewhere in some water. Here, if you are having the losses, that will continue. No, just because you are having the distribution, you can't make it zero. So that 10 will continue every year. I hope this point is clear what I'm saying. I'm writing a note here. Negative earnings and profits is possible. Is possible. Maybe because of business losses, but not due to because of distribution. But not due to distributions. Generally, I will not go so detailing into it, but there is one line given in your book. That's why I have to cover this. Otherwise, I don't cover. This is not relevant for your exam purposes, I guess. But here they're given. General rule. General rule is payment of the dividend does not create a taxable event. Yes. Whenever for a company, whenever you are paying it, it is not going to create the taxable event for the company. A dividend is a reduction of the earnings and profit. So they have given just the one liner here. That's why we are discussing this. But I don't think the level we have tested here that you cannot have the negative or something to that level they will check in your exams. But since they have given the line on this, I'm covering the basic ground on that. Point here, guys. Everyone. Okay. That's pretty much it, everyone. I'll cover rest of the topics tomorrow uh, on the coming weekend, guys. Are we going faster? Is the speed okay? Is the speed okay? Yeah. Uh, I understand, guys. You most of you are doing it. You have not done reg, and that's why the concept might be looking little complicated to you. But that's the problem. If you have done the reg, you will understand things much better, much faster. For example, today you have done distribution lecture. So that's why I could easily start the topic much better, much faster with you. Otherwise, if you have seen how basic I have gone into the distribution in the basic in the beginning, and that's why you have scaled it up. But I'll keep doing it, guys. Whatever the lectures you need to see from the rec, I'll keep telling you so that just have a look at the lectures before that. And we are going to save the time in the TCP itself. My whole idea is to finish the course timely so that you can write your exams. Otherwise, if I start discussing the reg also, will take a lot of time and you will not be able to write your exams. Okay. So I hope everyone is on the Telegram channel, right? Telegram channel, Telegram group. Not the Telegram channel, sorry, WhatsApp channel. WhatsApp channel and the WhatsApp group. Ashraf, you're not on the WhatsApp group. WhatsApp channel, are you on the WhatsApp channel or not? No, Telegram by mistake, I swear. Telegram. On the WhatsApp channel, everyone is on the WhatsApp channel. Reena, you are not on the WhatsApp channel. Ruchi, you are not. WhatsApp channel, you're not there. Ruchi, Reena, you're not on the WhatsApp channel. Okay. I'm sharing you the link here. Yeah. That's the link. Guys, Ruchi, you can join with this. Okay. So I'll keep suggesting you. I'll keep suggesting you that which topic you have to read before the class. Um, I think this topic I'm going to continue, and I'm going to try more and more questions in the coming weekend. Please join timely next weekend, guys. And if you have any questions, be in touch with me. You can be in touch with me over the LinkedIn also. You can be in touch with me over the WhatsApp also. All right. Thank you so much for your time, guys. And hopefully you have enjoyed the session. It's not so complicated and boring. Complicated, I can't avoid. I try to make it as simple as possible, but hopefully you have understood most of the items, guys. Please do one thing. You don't need to read anything new, guys. You don't need to read anything new. Uh, just whatever we have done it, all these lectures would be available to you within 48 hours. Um, uh, all the lectures would be available to you within the next 48 hours, guys. Please revise, right? Just revise, guys. Yeah, sure, no problem, Shalini. That's why I'm saying just revise. Whatever we have done it, 2 lectures, just have a look at that. That would be good, right? You don't need to do anything before the class. If you need to see the reg class, I'll tell you that. But other than you don't need to read anything new, you don't need to do anything else. But just whatever we have done it, please read that so that next class is going to be much easier for you. All right. Great. Thank you so much for your time, guys. And I'll see you next weekend. Bye-bye. Good night.